Good morning and welcome to Beyond the SEAF model. This is effective for February 5th, 2024. I'm Jack Kosar. Let's get started. Our SEAF signals for this week are financials, healthcare, and technology. With healthcare coming new to the SEAF signals, with technology and financials being legacy picks from last week. Key things to note here, just in the top three to start. Healthcare having a really strong trading week, coming in at number one. Flows being relatively strong. Not as strong as we've seen technology in the past, but overall a nice flow into healthcare. Also seeing that kind of momentum from 8 to 3 to 1, showing some major strength in healthcare. Technology. Really holding on from its tactical and strategic. As SEAF is a momentum model, we look to see this kind of flow over all time periods for strength. This is a little bit of a red flag here, looking at technology with the strongest outflow for the particular time period. This was also net. The absolute value of the flows. Technology was the largest, happening to be a outflow. So that is key to note. Another thing we want to keep an eye on is consumer staples, almost having a reverse viewpoint of technology, showing a 10 to 8 to 2, going from strategic tactical to trading, and really kind of being dragged down into this neutral ranking due to the strategic and a little bit of the tactical. So as we potentially see flows continue to go into consumer staples, looking for the strategic to potentially drop off. We can see consumer staples kind of shoot up the rankings over the next couple weeks if things continue as status quo as they are right now. Last thing to note here, just our top three in the trading week: healthcare's, industrial, and consumer staples, relatively defensive in nature. Coming that also with with technology having a strong outflow. That you could read a little bit into where the market is potentially headed. Going into our heat map. We are still seeing that relative clumping that I was seeing last week, though it is getting a little bit disparate on the trading week. We looked for that to normalize as these things continue to trend. As I said, technology had a very strong outflow that is being paired with two very strong inflows for the strategic and the tactical. So we are to keep an eye on this. I'll show a little bit more detail in the rainbow chart to follow. Healthcare coming in strong at 1, and seeing consumer discretionary, consumer staples kind of coming up the rear in terms of positive inflows. Again, as we look at this heat map, the key thing to realize is that, when we're seeing these strong reds or strong greens, those are the strongest inflows for the particular week. We're seeing some kind of a little bit more conviction this week, which we'll show you is kind of showed up in the relative performance. Going into our rainbow charts. As I said, technology fell off, still in the favored ranking, still a SEAF signal, but we have seen this correction a little bit on the relative performance versus SPY. Why is this happening? We're not sure. The cool thing about this model is it's going to keep us in this trade as the flows on net are strong across technology, with the weekly being the weakest. We have seen a little bit of a pullback in the relative performance versus SPY, but that could be a number of things, right? Managers could be looking to take advantage of the fact that we've really outperformed SPY since the beginning of the year, wanting to kind of lock in some early wins for the year. This could be the start of a correction if technology is truly leading, and we have a couple of days of negative outflows for the week. So again, not biting on this quite yet. This is a SEAF signal for this week, but just wanting to highlight we are seeing a little bit of regression in the relative performance versus SPY, and it's something we want to keep an eye on. Looking at healthcare. Healthcare shot up into the middle favor ranking right here, picking up some relative outperformance. Would like to see it kind of break out of much of a box sideways pattern for the relative performance of healthcare over the last, call it 6-7 months. But it is nice to see a little bit of relative outperformance. If we can continue this trend into healthcare, we would we'll break through this box and see this kind of relative performance head up in this direction. As of right now, trending in the right direction for healthcare. energy, kind of looking, we were talking about energy a little bit last week. It came up, tested up into this upper avoid, lower neutral area, and it failed. And you can see, the expectations started to get that relative performance versus SPY, starting to see that turn down. Again, we as these things trend and as we watch these things, we want to see it get up into the neutral and then up into favored. This tested and failed, and that resulted in downward pointing relative performance. Last but not least, consumer staples. Consumer staples is not a SEAF signal for this week, but I just want to kind of highlight similar patterns that we're seeing. If you are a little bit more, have a larger appetite for risk, potentially wanting to take a lead off into consumer staples. Again, not a SEAF signal for this week, but starting to see the relative outperformance, potentially breaking this resistance, heading toward the resistance. So, keep note for that. But as we're heading into this neutral, if we can continue to get flows out of consumer staples, drop off some of those flows from a couple of months ago, we could see this getting up into the favored ranking, which would then correspond for some positive relative performance. As of right now, we are still on a downward slope in terms of the relative performance, but are seeing a little bit of promise at the bottom here. That's all I have for this week. I hope everybody has a wonderful week, and I look forward to breaking down the SEAF model again for you next week. Thank you.